Hey everyone, hopefully you're having a good day. My name's Andy. My channel's Finding Value. We're going to go through the comment section. I can answer some of your guys' comments, give you guys a little bit more information so we can interact with people who are following the channel here. So let's dive in a couple, answer some of these questions. I'll show you with data what maybe Shabam or some of your guys' questions about some of the things that he was saying or questions in general that you guys put in the comment section. So one of the questions is, I think it's time for a platinum ratio update. So I charted the ratios PL1 and GC1 because I was getting weird data with platinum and gold, those two. So obviously, big picture view, this is a big double top, big Batman pattern there. And we went down because of the market conditions all the way down, and we haven't broken out yet using this, but I can tell you it looks like we are putting in a bottom and ready to eventually work our way higher there. There's your support that we keep hitting. Another chart that you could look at is the XAU to gold ratio. It's doing the same type of pattern movement, and I do think we're going to break here at some point very soon. Why do I think we're going to break? Well, it's because of the market conditions. It is because gold, silver, and platinum go up at the time when we see a pullback in the overall markets. I think we're going to go to a risk off late cycle. The yield curve will uninvert to some extent, and I think platinum and gold can take off. Now, if we don't get that inversion, the uninversion of the curve, it is still possible if these go up with interest rates like the 1970s. So I've been watching that dynamic, watching that relationship. I'm invested in these either way because they're cheap against all the other assets. But platinum is incredibly cheap against gold. It's at half an ounce. Historically, it trades at about 1.25. 1.25 historically is about right there, that line I just put in. We're at 0.5. We've gotten to levels above 2. We've gotten to levels above 3 and maybe even 4, if I can remember back in the day. There were levels in the hyperinflation in the 1920s where platinum was at 5.5 times the price of gold in Germany. So that is something to think about. We are at a very low valuation for platinum against all the other metals, and it does very well during inflationary periods. So the question is, are we in an inflationary period? I think we are. We are starting that. And this is starting to put in a bottom here for this ratio where platinum could outperform basically everything. Platinum is also more sensitive to inflation than palladium, and it has made a large move against palladium off its low. It was a low of 0.3, and now we're at 0.8, and we're working our way higher. And this is, I think, a bottom here, and I think we are putting in a bottom here. It just takes time, guys. You load up when you're down and you're low, and then you wait, and then you get that large valuation runway where platinum was going to outperform. Now look at the over, over this line here. This is 4. This is 4. And if you could trade your platinum for palladium up here, you are going to kill it from a ratio perspective. I did my swap at 0.3 something, so I did it right here in April of 2020. That's where I swapped all my palladium holdings into platinum. The premiums were really low too, so I got a really good deal. Nobody was buying platinum. Everybody hated platinum at that time. Perfect. Give me a bunch of it. So I'm riding it, and I think we could see a vast outperformance of platinum. Platinum versus silver, another one that is also broken out of this falling wedge. And we are right there doing a retest move. So platinum is still the preferred one. And this could even come back down to this bottom here at 31, 32. It is possible. I'm not saying it will do that. It's still possible, though. And because the third hump here can sometimes go all the way back down. And sometimes it doesn't go all the way back down. We are above the trend line at support level. So I would probably say that this is going to hold and break up. But again, we'll see. So that's the platinum against the other metals. And platinum is looking fantastic from a long-term perspective. Now, a couple people are making comments. Why is he so pessimistic about Midstream? What blue chip companies is he using in comparison to the smaller companies? Well, I think you need to look at it from this perspective, guys. If I just were to take PSCE, which is the small cap energy ETF, and look at it and compare it to the spider oil and gas exploration production companies, and we would just take the ratio here, and you say, okay, what is this telling us? We've got a downtrend line break here. We have a broken downtrend line, and then this here looks like we're about to outperform. The green army showing up, where the small caps are about to outperform the larger companies. That is what he's talking about. And the valuation difference is big between the small cap producers and the larger cap producers. So what he is saying is he thinks that the valuations of the larger companies are rich right now, and a better investment is PSCE or small cap energy exploration companies because of the valuation difference. And that the risk is lower in the small caps because of the valuation difference. I am showing you with objective evidence that he is right, period. This thing is ready to rip to the upside and have an outperformance for the small cap guys. Now, I can also throw in PSCE divided by XLE. This is the big energy guys. And what are we seeing? We're seeing this is an outperformance of XLE coming down. Now that's changing as we're basing out, and eventually this is going to work its way higher in this kind of bowl-shaped pattern. And that means that the small caps are going to light it up here. They're going to light it up. So we should be looking and focusing our efforts or money in either small cap ETFs or small cap individual companies. And we've been looking at small cap companies on the website, and we're heavily invested in some of those small cap companies. And that's on the Finding-Value website in our community. Coming on back. The uranium market's very, very thin, very opaque relative to oil market or precious metals, and especially the stock market. I agree that the winning approach is patience and not trying to trade it for anything. It's a mistake. I made that mistake in early 2022, and I don't intend to do that again. Just initiated a position in DYL, and I hope I get time to build it into something meaningful before it takes off. Don't try to time this stuff, guys. Don't try to be maximizing your returns by trying to time short-term market movements. I think that's the wrong approach. I think you want to go long, stay long like I'm going to do, and not try to time the short term. Timing the short term is very difficult. And in the uranium market, the movements are very big and they're very fast. It is very hard to time it, and it's psychologically damaging. Buying a stock at $2, it goes to $5, and you try timing it, and then all of a sudden it goes in the opposite direction of the direction you thought it was. And it's very hard to buy back in if it's $7 or $8 from a psychological standpoint. And it will psychologically destroy you if you try to do that. Trust me, it is very hard to do that, to buy back in at a much higher price. And then if you do, you're going to get the pullback, and it's going to whipsaw you in the opposite direction. You get a pullback back to 6, and then all of a sudden you're selling because you just bought at 8, and now you're selling at 6, and then it rips back to the upside, and it just gets you all sorts of twisted up. That played with me last bull market, commodity bull market. I'm not doing it again. I'm just going to ride it and accumulate when it's cheap. It focuses my efforts on accumulating in a bull market at cheap levels. I'm more laser focused. We've only taken off the launch pad. It isn't mission complete. Correct. We could get some more pullbacks in uranium. Totally agree. It's not a one-way street. So just be patient there, guys. The price of uranium is up 60 plus. Now you said we are in 2001, but the uranium price is a lot higher. Now, can you look at the uranium price, please? And if we are at the 6 to 7 year from the top, what can the price go to, just thinking if we are early, okay, and how long? So basically, where we are in the uranium bull market, we are very early in this bull market. And the reason I can say that is if you chart URA divided by UX1, the uranium equities haven't even come off this bottom yet, guys. It hasn't even come off the bottom yet. So, I mean, this is basically saying that the bull market hasn't even started. And you're wondering how long the bull market will last. It hasn't even started, guys. Like, yes, the futures pricing has moved up, but the equities haven't gone anywhere. They're just sideways. The under and why is all right? Here's another thing I'll go into. Ratios are important because everything in this world is on a relative basis. Value is relative. It's all relative. So URA relative to uranium's future pricing is important because the value is derived, the equities value are derived from the underlying commodity. And if there's a mismatch between the two, that is where your value is. Now, I think what's happening is uranium's moving up, inflation is moving up, and the mining costs are also moving up. So I think we're going to see an outperformance of the physical metal first, which is the uranium futures price, which we are seeing. It's going down. Then we're going to see the equities play a catch-up move, which is going to be ridiculous. They're going to move up at a ridiculous pace to a ridiculous level, and people are going to try to time the short term. Good luck with that. Just ride this thing. So we are very early because the relative valuation is cheap, and the commodities bull market. If you look at other metrics like the commodity to stock ratio, all of the other metrics that we look at are all basically saying that this is the beginning of the last bull market. We are underneath that, and look at how big that bull market lasted. This is going to be a big move where commodities are going to outperform the S&P 500. So everything we look at in this driver, the right market conditions that are driving the rotation of money, we're early in every single indicator. We're early in the CRB index to equities ratio. We are early in the housing starts starting to bite into the deficits that we have in the home market. It doesn't mean that the home market's going to have this super smooth build transition. We could have a recession. We could have a pullback in the middle of this bull market, which is possible, and maybe not. No one knows that. Where they have to lower interest rates, and the lowering of interest rates kick on the housing market again. The housing starts accelerating this rotation of money. So we're early in every single metric. I could pull up the uranium ratio to the M2 money supply. That is also at a very early move, and we are making progress. The valuation runway is ridiculous up to this level. We have a long way to run. So the way that we are so early in this market is because we are early in every single indicator that we look at. I mean, it's just early. There's nothing that's late stage necessarily. We will probably get more pullbacks. I get it. Yep. Shabam brings the knowledge for sure. Shabam has a lot of knowledge out there. Turtlehead means something else. Yep, I am well aware of that. It says, great job as always, Andy. We are definitely in the early stages. We got a long runway ahead of us. Looking forward to it. Happy Platinum member here. If anybody's on the fence about Andy's service, it's top notch. You are going to love the meetings every weekend. Yeah, we go over a lot of stuff. Individual companies, guys. You know, there's a lot of opportunity right now that people aren't looking at. There's steel, there's iron ore, there's dry bulk shipping. And guys, I'll share a chart here, guys. Okay, check this out. You guys are gonna like this. All right. So we're gonna price dry bulk, the BDI, Baltic Dry Index, divided by UX1. This is the Baltic Dry Index versus uranium. Not many people know this, but the Baltic Dry Index outperformed uranium in 2007. You see that move higher, guys? Right now, if you were to look, the Baltic Dry Index, I think it could be one, it's at a very cheap ratio, but two, it could be lining up to outperform UX1, which is uranium. It could be. We're at a very cheap valuation for Baltic Dry Index versus uranium, and we could see a big move in the Baltic Dry Index. And all I'm going to say is no one's looking. No one's looking. This is when you buy, when no one's looking. You can also, there's a bunch of different measurements. If you were to look at things, that Baltic Dry Index is also about to outperform gold. It's about to outperform basically everything. And it's of no surprise that iron ore has also broken its three hump and is starting to move higher. It's all interconnected, guys. So no one's looking. And I can give you individual stock picks and all this stuff. There's some with some huge upside in dry bulk shipping, in iron ore and steel. Lots of big upside here, guys. So everything is looking quite good in the commodity place, the commodity area. And there's a lot of long valuation runways ahead of us in some of these sectors to really start to outperform. So be cognizant, guys. Watch it. Get positioned. Stay positioned. Don't try to play the short-term market movements here. I think it's going to be difficult. And I can help you with all that stuff if you need help. So that's all I've got for today, guys. Give me a thumb up for the content. Subscribe to the channel. And we go over the platinum question and answer sessions. They're very similar to what we're going and what I'm doing here. I answer your questions, and you can ask me directly whatever you like. We can go over more educational stuff. We can go over more market condition stuff, which is highly important for people to hold on to those shares. Say, okay, we're still good. It's still going. We're just coming through a little pullback. It's a good time to accumulate. You can see what I'm accumulating. You can see what I'm accumulating. I share that all on the website. All right, guys. We'll catch you later. This is Finding Value.